Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I call it a slow roll because that seems to be what's going on. It feels like something is about to break. The market price action and a lot of the indicators we look at say that we are either have rolled over or in the process of rolling over. And so we're going to take a look at the NASDAQ composite today. We're going to look at the NASDAQ 100, the Qs. Take a look at the Russell 2000 ETF, IWM. Check in on the high yield bond fund, the dollar index. I know some of you have really been hammering for the dollar index. We look at it every day, by the way, and I'll talk about it today. And then I want to do that comparison when I take a look at all the FAANG stocks and see how they all compare to each other, and then drill down and take a look at Apple and Microsoft. So let's start off here with the side-by-side view of the Dow Industrials, the S&P 500, and the NASDAQ Composite. The Dow was down 953 points this week, closing below the trading range of the last 2 weeks. So nice little negative move. You kind of like the way this looks. Let me get rid of the crosshairs for a minute. Where we have this bullish candle, short little body up here. It's not quite a star, an evening star or whatever, but it kind of has that look, doesn't it? A little bullish candle, little short little body, and then this bearish candle coming down and then closing below those lows. And then over here, not quite that type of look that we got here on the S&P, and the S&P down 137 points. It did close below last week's low, but not the last 2 weeks. And then over here on the NASDAQ composite, it was down 457 points, but it didn't quite get to a close below the prior week low. But all the moving averages still are trending down here on a weekly basis. So we're going to take a look at that a little bit closer. But first, I want to look at the side-by-side of the Dow Industrials and the Dow Transports. So this non-confirmation where the transports did not confirm the push into a higher high that the Dow Industrials did is pretty negative. And then look what we got. I mean, this was down 758 points this week, closed below the trading range of the last 3 weeks. And it's back down, closing below the 10-week moving average. So right now it looks like it's in hard down. We'll see what kind of follow through we get. It's very similar to what I'm seeing on the Russell 2000 ETF. All right, let's go back and take a look at the NASDAQ composite. Okay, here's the NASDAQ composite weekly and daily charts, and this dark, well, it's kind of a purplish line, I guess, and I'm partially colorblind, so don't hold me to that. You notice how we came down to the 200-week moving average here, 200-week moving average in June, bounced up pretty good, came back down, broke below it, and then we've been kind of oscillating down below it and slightly around it. And now we're back down below it. So I'm going to watch and see, is this kind of now forming some kind of resistance in here for the NASDAQ on a weekly basis. And when we look at the daily chart, this looks like a wedge. I know that a bearish wedge. The S&P 500 is also got a bearish wedge, a little bit different, a little longer look to it. But this isn't bad. I mean, from a classic type of breakdown out of the wedge, some of the more powerful breakdowns you get occur 2/3 of the way out from the length of the wedge. And that's right about where we are, and we're breaking down. The first breakdown on this daily happened on Tuesday, down below this trend line. So let's take a look at the Elliott wave picture. So here's what we've got. It looks like a little price channel in here for the ABC zigzag pattern that I've got here for wave 2. Pretty shallow wave 2 compared to what has occurred in the S&P, and of course the Dow came all the way back. Different type of corrective pattern in a big flat. But the interesting thing I think about this channel is look how we had one little day where we blipped up above the top of that channel. And then back over here on, let's see, where was it? Last Thursday, slight little flip above it too. And then we came back out. Couldn't hold above it, couldn't keep pushing. So right now, I think right now we're looking at this being looking for the follow through, I guess is the words I'm looking for. Looking for the follow through to the downside. And here's the wave count. If you go drill down and take a look at the hourly view, this is what it looks like for the C wave. I think we had a 5-wave move up in here. And now to confirm this breakdown, I want to see this come down and break below this wave 1 high. I'm talking about wave 1 of the C wave. I think if we do that, that's going to assure us that we're not in some kind of complex wave 4, and because you can't have wave 4 overlap wave 1 in this pattern. So I think it increases the probability that we are underway in minor wave 3 of intermediate wave 3. Okay, so that's where we're at with the NASDAQ composite. Let's look at this. It's very similar on the NASDAQ 100, the Qs here, the ETF. Same kind of picture, little bit not quite as flat in terms of the zigzag picture that we've got, but I also have a 5-wave picture in here, and here's the dashed line for wave 1. It's at 272.85. So I am looking for the Qs to come down, break below 272.85, and that's going to increase the probability that minor wave 3 is well underway, and we'll be taking out those October 13 lows, okay, which is 268.82. Now, 254.26 is the October 13th low on the Qs. Okay, that is Qs. Let's take a look at the Russell 2000 ETF. Okay, here's how the IWM looks on a weekly and daily basis. So here's that 200-week moving average over here. And you can see how it's been oscillating around it. Well, here's June, mid-June, a little bit of support, broke below it, back above it, back below it, back above it, and now we closed this last week below it. But again, look at how strong in terms of closing below the trading range of the prior 3 weeks in here. Let me go, there we go. It's a little clearer to see when you don't have all the moving averages on it. And it literally closed something like 20 cents, or let me see, the low is 178.56, 6 cents off the low for the week. So, I mean, they really hammered this thing down in the at the end of the day. So this is the picture we've got. And on IWM, of course, this wave 2 was a lot deeper than what I just showed you on the Qs and the NASDAQ composite. But I think we are underway looking for this 174.27 to break, for us to break below this, which is the low of the X wave. I think we had a kind of a combined WXY in here for the corrective pattern. And so we break down below it. I think it's going to increase the probability that we are underway in minor wave 3. And, you know, you get into wave 3s, like getting in wave 3 of a wave 3, a larger intermediate wave 3, and things can get go south very quickly. So be on alert, because that's exactly what can happen in a wave 3, especially when you're in a third of a third type of thing. Okay, let's take a look at the high yield bond fund. And let me go back to the moving average view. Let me make it like this, because I'm going to pull up the HYG. We're still looking like we're in counter trendish mode in here. We haven't had a moving average rollover just yet, although it looks like it's getting close. Friday, the high yield bond fund was dead flat, no change. For the week, down 52 cents. So we'll see how much longer does this hold up. And I'm watching for this thing to start getting into risk off mode and break down out of this channel. Let me adjust this a little bit and bring this thing down a little like that, maybe. Anyway, close enough. All right, so that's the picture, what's going on. So far, it's been staying in sync with the market. We'll see if that continues. Now, the dollar index. Let's take a look at that. Of course, this peaked back over here the week of September 25th, and since then it's been trending down. Notice how on November 10th it came down. Here was a support area, and the low of that day was right into that support area. Then the next day shattered right down through it, broke right through it. And then when we pulled back, I was really expecting resistance to occur right there. It did just get a little bit above that area, and then it sold off down from that. Now, the Elliott wave picture that I've got is that I believe that we are in primary wave 2 of cycle wave 3. Okay, so I think we're in a big cycle wave up. And right now, I think we're in primary 2. Wouldn't be surprised. See how 50% is right in here, right at this major trend line from the highs over here. So I wouldn't be surprised to see it terminate in this area down around 102. But when I look at the daily view, I'm looking for this fifth wave to end. Okay, so 5 waves of an ABC zigzag corrective pattern. That's what I'm watching for right now. But always on the alert for the fact that when you get into corrective modes can become messy. They can become complex. They're not always nice, clean, and simple zigzag patterns. But right now, this is what we've got. So that's my target. Okay, let's take a look at we'll take a look at the FAANG stocks. Okay, I've shown this side-by-side view before, with the focus being on this the red line, which is the March 2020 low. So you can see Meta, Netflix, have traded down below the 2020 low. Close to, they're both well below their 200-week moving averages. Okay, Amazon is below its 200-week moving average. Looks like it's approaching the March 2020 low. And then we've got Microsoft, Alphabet, and Apple. Now, you've got Alphabet. It actually, this last week, it's kind of unclear. Let me see if I can zoom in. We closed below that 200-week moving average. Okay, so we got above it, and now we're back down below it again. And then over here on Microsoft, we're above it. But I'm watching for this to come down also, because these two, between Microsoft and Apple, they've got, well, I guess Alphabet also has quite a bit of territory to get down and get to the March 2020 lows, which I think there's a decent chance, as this market continues to sell off, that these are going to go down and they're going to test these lows, if not break them. Okay, so watching to see when these start to break down below the 200-week moving average. And it's interesting when you think about the kind of move that I'm expecting out of the Dow Industrials and the S&P 500 and this next third wave down. Which of these stocks are they lagging and could make some big breaks in here? And I look at Apple, I look at Microsoft, and I look at Alphabet. All right, so let's take a look. I'm going to go back and pull up, let's see, I want to pull up Apple first. Okay, Apple was down 49 cents on Friday and down $5.65 for the week. So here's that weekly view. Here's that 200-week moving average over here. All the moving averages I have on here, which is the 10 exponential, 21 simple, and 55 simple. They're all in downward trending mode, okay? So the 10's below the 21, below the 55. Similar, but not exact, but similar in terms of over here on the daily, and we're targeting the October 13th low. And it's interesting, here in November, we came down literally within a penny of that low. And so right now, I would not be surprised to see this take this out as we continue to punch lower. That's what I'm looking at. Friday, this was the morning, 195 minute. Here was the morning session on Apple. And then look how we came back down in the afternoon. It just couldn't hold it, okay? And so, we got a big gap here on the 195 minute chart. It shows up as a little smaller over here on the daily, but, pretty good gap that I think we're gonna easily come down and close and then take out those lows. So that's what I'm looking for on Apple. But I'll tell you, the Elliott wave pattern in here, I keep looking at this, the actual wave labeling, I struggle with. So I decided, okay, I'm not going to go there right now. I believe that we're in the third intermediate wave, but this wave count in here is a little problematic to me. But let's take a look at Microsoft. Not so problematic on Microsoft. So here's the trend. I'm not sure why the that moving average didn't show up. Maybe it's just too far down below it. No, for some reason it didn't. Well, let me put it on there. There we go. By the magic of the pause button, we have the 200-week moving average here on Microsoft. So we've come down and tested it the week of October 30th, and then we bounced up, and now it looks like, you know, we're at least this last week, we got a nice little down move. It was, what was it down this last week? $9.60, down $1.98 on Friday. So here's the thing that jumped out at me on Microsoft. This looks to me like a three-wave, and a 5-wave move up to here. That is a flat. That's the definition of a flat. So that's what I'm labeling it as for wave 2. And here's the wave count I've got on here. We are in intermediate wave 2, and that, again, wave 2, intermediate wave 2 complete, intermediate wave 3 underway, and that we are most likely have begun minor 3 of intermediate wave 3, just like I've been looking for on the other indices, okay? Just like on the S&P, just like on the NASDAQ composite, etc. So watching for this to continue to come down. Look at this beautiful gap just hanging there. It's just begging to be closed. And where's that? The high of this day is 228.63. We closed at 245 on Friday. So that's the picture I've got on Microsoft, watching on Microsoft and Apple, and you know, think that they're going to most likely be making up some, what's the right word? Making up for lost time, I guess, and catching up to some of their other FANG brethren as we head south here. Okay, that's it for this video. If you felt like the video was helpful, give it a thumbs up and if you're not a subscriber to the channel, hit that little subscriber button. And if you'd like more of this information on a regular basis, head on over to joehenches.net. Check out the website, check out the membership. Everyone have a great week. We'll talk to you on the next video.